This video is designed to help you start a duck farm business. At the end of the video, you'll find a valuable gift. It's a duck farm business plan that you can download, and will lay down for you, step by step, everything you need to know to start a successful duck farm business of your own. If you are new to this channel, make sure to hit the subscribe button for more videos like this. To begin, one must establish the size of the farm, which is determined by the number of birds. Small farms with 6,000 ducks per batch, to huge operations with 50,000 to 100,000 ducks per batch. Commercial operations vary in size. Selection of breed. The second stage is to decide whether you want to raise ducks for eggs or for meat. The breed should then be chosen accordingly. Capital investment. Finally, calculate the capital investment and development costs for your duck farming. It covers the cost of the house, the land, the cost of feeding, the cost of compliance, the cost of purchasing ducklings, and the cost of medicines. Remember to get professional advice on legal, financial, and commercial issues. It's a must if you're running a farm under a contract with a processing company. What are the advantages of duck farming? Housing. Ducks require housing that is less expensive, basic, and uncomplicated. As a result, the costs of setting up a commercial duck farming enterprise are low. Less management. Ducks require less maintenance, because they are sturdy birds. They are extremely adaptable and can adapt to practically any type of environmental condition. You will get fresh eggs. Ducks do lay eggs at night and in the morning. Every morning, you can collect their fresh eggs, while doing other tasks for the rest of the day. Less space. When compared to other poultry farm businesses, raising ducks requires less room. They also have a shorter brooding period and grow their ducklings faster. Surprisingly, they develop so quickly that you may give them artificial heat in just 5 to 7 days. During the winter, they will, however, require a slightly longer heating duration. Duck feeding. Ducks are relatively easy to feed, and may be fed a wide variety of meals. Copra, cassava, corn, rice, fruits, and other low-cost items are part of their daily diet. Ducks also have a natural foraging preference for green legumes, algae, aquatic weeds, fungi, earthworms, maggots, snails, and other insects. Ducks live longer than chickens, as they have less mortality rate. High demand in the market. Duck eggs and meat are in high demand both locally and internationally. Profitable business. Duck farming can provide a steady source of income. Many young, educated persons who are unemployed can join this firm, and make good money. Ducks live longer. Ducks live longer than chickens as they have less mortality rate. Is there money in duck farming? Yes, a commercial duck farming company can be a profitable one. Duck eggs and meat are in high demand in both domestic and international markets. There are a lot of successful farmers who make a lot of money from duck farming. The potential income, however, varies based on the size of the operation, the contract price negotiated with the processor, and the number of batches produced per year. The next part of the video is not specific to the duck farm business. Nevertheless, this knowledge is essential for success in the duck farm business, as well as in any other business. Ignore it at your own peril. Operating a successful duck farm business will depend on the following 4 conventions. 1. A practical plan, with a solid foundation. 2. Dedication, and willingness to sacrifice, to reach your goal. 3. Technical skills. 4. Basic knowledge of management, finance, record keeping and market analysis. As a new owner, you will need to master these skills and techniques if your business is to be successful. Finding a niche. Small businesses range in size from a manufacturer, with many employees, and millions of dollars in equipment, to the lone window washer, with a bucket and a sponge. Obviously, the knowledge and skills, required for these two extremes, are far apart, but for success they have one thing in common. Each has found a business niche, and is filling it. The most critical problems you will face, in your early planning, will be to find your niche, and determine the feasibility of your idea. Get into the right business at the right time, is very good advice, but following that advice may be difficult. Many entrepreneurs plunge into a business venture, so blinded by the dream, that they fail to thoroughly evaluate its potential. Is your business idea feasible? Before you invest time, effort, and money, the following exercise will help you separate sound ideas from those bearing a high potential for failure. Identify and briefly describe the business you plan to start. Identify the product or service you plan to sell. Answering yes to any of the following 3 questions means you are on the right track. A negative answer to all of them means the road ahead could be rough. 1. Does your product or service satisfy an unfilled need? 2. Will your product or service serve an existing market in which demand exceeds supply? 3. Will your product or service be competitive based on its quality, selection, price, or location? Market analysis. For a small business to be successful, the owner must know the market. To learn the market, you must analyze it, a process that takes time and effort. You don't have to be a trained statistician to analyze the marketplace, nor does the analysis have to be costly. Analyzing the market is a way to gather facts about potential customers and to determine the demand for your product or service. The more information you gather, the greater your chances of capturing a segment of the market. Know the market before investing your time and money in any business venture. The following questions will help you collect the information necessary to analyze your market and determine if your product or service will sell. This brief exercise will give you a good idea of the kind of market planning you need to do. An answer of no to any of the questions indicates a weakness in your plan, so do your research until you can answer each question with a yes. 1. Do you know who your customers will be? 2. Do you understand their needs and desires? 3. Do you know where they live? 4. Will you be offering the kind of products or services that they will buy? 5. Will your prices be competitive in quality and value? 6. Will your promotional program be effective? 7. Do you understand how your business compares with your competitors? 8. Will your business be conveniently located for the people you plan to serve? 9. Will there be adequate parking facilities for the people you plan to serve? Planning your startup. The following questions are grouped according to function. They are designed to help you prepare for opening day. Merchandise. Have you decided what items you will sell or produce, or what services you will provide? Have you made a merchandise plan, based upon estimated sales, to determine the amount of inventory you will need to control purchases? Have you found reliable suppliers, who will assist you in the startup? Have you compared the prices, quality, and credit terms of suppliers? Business records. Are you prepared to maintain complete records of sales, income and expenses, accounts payable, and receivables? Have you determined how to handle payroll records, tax reports, and payments? Do you know what financial reports should be prepared, and how to prepare them? Finances. A large number of small businesses fail each year. There are a number of reasons for these failures, but one of the main reasons is insufficient funds. Too many entrepreneurs try to start and operate a business without sufficient capital, money. To avoid this dilemma, you can review your situation by analyzing the following 3 questions. 1. How much money do you have? 2. How much money will you need to start your business? 3. How much money will you need to stay in business? In order to answer the second question, how much money will you need to start your business? You need to prepare an estimate of all your startup costs. Here is a list of items you may need to take into account. Note that this list is for a retail business. Items will vary for service, construction, manufacturing or online firms. Decorating and remodeling, fixtures and equipment, installing fixtures and equipment, services and supplies, beginning inventory cost, legal, professional fees, licenses and permits, telephone utility deposits, insurance, signs, advertising for opening, unanticipated expenses. Now, the answer to the third question, how much money will you need to stay in business? Must be divided into 2 parts, immediate costs, and future costs. From the moment the door to your new business opens, a certain amount of income may come in. However, this income should not be projected in your operating expenses. You will need enough money available to cover costs for at least the first 3 months of operation. The following list will help you project your operating expenses on a monthly basis. Typical expenses for 1 month may include your living costs, employee wages, rent, advertising, supplies, utilities, insurance, taxes, maintenance, delivery, transportation, miscellaneous. Now sum up the total estimated monthly expenses, and multiply it by 3. This is the amount of cash you will need to cover operating expenses for 3 months. Deposit this amount in a savings account before opening your business. Use it only for those purposes listed in the above list, because this money will ensure that you will be able to continue in business during the crucial early stages. By adding the total startup costs to the total expenses for 3 months, you can learn what the estimated costs will be to start and operate your business for 3 months. By subtracting the totals of the lists from the cash available, you can determine the amount of additional financing you may need, if any. Now you will need to estimate your operating expenses for the first year after startup. The first step in determining your annual expenses is to estimate your sales volume, month by month. Next, determine the cost of sales. You may want to use a spreadsheet to do this. After startup, the primary source of revenue in your business will be from sales, but your sales will vary from month to month because of seasonal patterns and other factors. It is important to determine if your monthly sales will produce enough income to pay each month's bills. An estimated cash flow projection will show if the monthly cash balance is going to be subject to such factors as the following: failure to recognize seasonal trends, excessive cash taken from the business for living expenses, too rapid expansion, and slow collection of accounts if credit is extended to customers. Conclusion: if you have carefully answered all the questions in this video, you have seriously thought about your goal. However, there may be some things you may feel you need to know more about. Owning and running a duck farm business is a continuous learning process. Research your idea, and do as much as you can, yourself, but don't hesitate to seek help from people who can tell you what you need to know. As we conclude this video, it's time you get your free duck farm business plan gift. Go to the description below this video to get it now. It is completely free, no strings attached. Thanks for watching. If you enjoyed this video, please like and hit the subscribe button for more videos like this.